Alexa, how are you?
I'm doing well. Hi.
Great. Are you in New York?
In sunny New York City, 80 degrees today. It's
Oh
like
my gosh. It's
amazing.
like role reversal. It's freezing here. I just went and turned the heat up in my house. It's like 55 or 60 degrees in the Bay Area. It's crazy.
I'm like,
So
I will take our one really sunny day. We need it
yeah, yeah,
here.
you need it. Well, look, we only have a half hour, so let's jump in. I think folks would love to just hear a little bit of your background and, we'll fast forward to where you are today, but a little bit of background on where you grew up and sort of your journey to becoming a founder. And we'll jump in on that topic.
Sure. So I was born in Kentucky, grew up in Jacksonville, Florida. I always like to say, Jacksonville is almost part of the South, before Florida has gotten very hip this year, but spent my whole life in Florida.
It wasn't hip when you were there.
I don't ever think I thought it was super hip. Now I do. And I like go back and love every minute of it. But I grew up in Florida. I have 2 older brothers. And so I was the baby of the family. My eldest brother was 8 years older than me. And I always joke that if it wasn't for him, I had no friends unless I could keep up. So I just learned to run fast with the big boys. And I went to Harvard undergrad. I was a diver there. I dove springboard and platform. So
That scares me.
The crazy humans who fly off the platform. Probably gives you a sense of my risk tolerance right there. And really realized when I was undergrad that I was super entrepreneurial. I didn't know how to use the word entrepreneur, but I had that energy my whole life and really consistently. And so I applied to Harvard Business School, and I was one of the weird guinea pigs that got in early and I deferred for 2 years. And so kind of got to move to New York. I spent some time at Insight Venture Partners and
Oh, nice.
And then started writing a business plan, which the company that then became LearnBest, and then helped two friends who had founded a company called Dropio that ended up getting acquired by Facebook. And so went to HBS in the fall of 2008. Basically, Jeff, day 30 of my HBS moment, Lehman Brothers went under.
Oh.
And I said to myself, the company that I had been writing my business plan for nights and weekends called LearnBest was about empowering the American wallet. And I literally had this moment where I was like, when the world zigs, you have to zag. And the economy is going under, everyone is terrified. This is the best moment I could possibly go launch this business. So I dropped out of HBS, moved to New York, literally no capital, nobody.
Wow, that's a crazy move, because that was a scary time for those of us that were here. I remember every morning waking up and watching CNBC and just curling up in a ball because it was so scary. People literally thought the American financial system was going to collapse.
Literally.
Yeah.
And I'm a psychopath who was like, let's go start a company.
Wow. That's incredible.
In the rearview mirror, I'm really proud of myself for doing it, but I had this really clear thought, which is basically 90-year-old Alexa sits on my shoulder. And if I don't go do this, I'll regret it for the rest of my life. And it was pure. That was a pure thought. And so I dropped out and moved to New York. I literally just my savings that I put into the company. I didn't know anybody. There was no angel funds. There was maybe one venture fund.
Yeah.
Scrapped together around and stood up LearnBest, and we became financial planning software for the masses. Sold that business on our 5th birthday for $375 million. Sold on a Wednesday. I had my first child that weekend. Don't do that. That was amazing. Nuts. And then basically after finishing my lockup at Northwestern Mutual, who had acquired us, great company, I joined the management team as their chief digital officer. And I was responsible for the venture fund there. And I was investing a ton. And I just had this really clear moment where I said, I really want to go build the fund that I wish existed for 23-year-old Alexa von Tobel back in the day. And Inspired was born. And so that's in a nutshell me. And I live in New York. I have 3 little kids. I'm married to this great guy that I met in college named Cliff. And I work and have kids, and that's it.
and go back to I mean, that's pretty incredible to start a business and sell it 5 years later for $375 million. When you sort of wind back first of all, I'm just blown away that you would jump in and do that at that time, because for those of us, it's funny, I joined GGV in April of 2008. And I remember saying to my partner, Glenn, in November, December of 2008, oh my God, I can't believe I got into venture capital. This is the worst time in history. And he looked at me and he said, this is actually the best time in history. When the market is cratered and everybody's freaked out, it's the best time to jump in. And I always think about that, including in times like right now where the market is sort of, very volatile. But what did you, because the venture ecosystem in New York back then was pretty raw. I mean, I was on the board of Buddy Media, which was one of the first kind of heavily funded companies in New York, but there wasn't much there. How did you pull that all together? You know, when you think about people around other parts of the country, and there's obviously the complaint that a lot of the venture capital goes to New York and San Francisco and LA and Seattle. How did you pull it together? How did you get it off the ground? How did you, just kind of wind back the clock a little bit?
I'm smiling because literally the night of my wedding, my actual night of my wedding, my husband gave a speech to the 350 people there talking about that. And it was just this moment I'll remember for obviously every minute of my life, but basically it was miserable. Like I just didn't know what I didn't know. So I didn't know that actually that it was absolutely miserable. I moved to New York. I had one laptop. I opened it up. I just started being like, I'm going to talk to, as you know, I'm super passionate about financial literacy.
Mm-hmm.
I can empower people so much from giving them power in their wallet. And I started emailing anybody who would talk to me. And here's the thing, I didn't know a lot of people interested in financial literacy, and there were no angel investors. And I put in $75,000 of my own money. I didn't want to take money from friends and family because I already said, I've staked it all. I dropped out. I put in all my savings. I don't want to also take my friends and family down with me.
I remember having that same feeling. Yeah.
Yeah. And I was like, quite literally, I've jumped out of the plane. So like, I don't need that risk. So I didn't want any friends and family. I wanted real people who wanted to back me. And I just started emailing everybody who I thought would talk to me, and literally met actually anybody who would talk to me. And my husband joked that he would walk in, and I was doing it on his couch because I wasn't going to even move into my own apartment because I left all my stuff at HBS. I literally just left my furniture as like a time capsule and moved. And he would come home from work, and he was in investment banking. You literally walk in, and I'd be sitting there just working with tears streaming down my face because I got like 4 no's that day. People just being like, nah, this sounds nuts, because Madoff had taken everyone's money, and like people were like hiding money under their mattresses. And I was like, do you want to back a startup for the American empowerment of the wallet? And basically at one point I got one person to say yes, and then another person to say yes. And then a month later, 5 more people said yes. And we closed 750K. And then a fund wanted to come in for 250K by that point. And then we launched at TechCrunch 50. And at some point, please pull up the video. I called it getting tech punched. I was like selected of like a list to like come and debut on stage because it was such a good idea. And these 5 or 4 panelists, however many, literally were like, this is the worst idea. Why would anyone put their wallet online and digitize it? People don't think about their wallet like that. Millennials are coming
These
online.
were VCs or who?
All VCs, I will not mention.
And it's on video.
But you will see them.
Oh, I'm going to go watch it. Okay, great.
And the takeaway there's, and I just was like, here's all the reasons why the wallet's going to come online, and you've got to democratize the wallet, all these things. And got off stage, like got a standing ovation. I literally walked behind and burst into tears because I was like, wait, I came because I was a winner, but everyone just told me my idea is terrible. Like, I'm just giving you the rawness of like, it just.
Yeah, it's hard. It's hard.
And then we launched, and 50,000 people literally signed up in weeks, and like 9 funds wanted to back me, and I ended up taking capital from Excel, and we just started building. And so my husband told that story, and he said like that was the year that I like saw what my now wife is made of. And it was just obviously a really beautiful thing for him to say, but it was brutal. And I think people say it's brutal. It was brutal. It was actually really, really,
it is brutal. It is brutal. It's funny. I just started watching the We Crashed show with my wife, and it's actually pretty well done. And
Right?
Hathaway is amazing. But it obviously completely goes off the rails. But the part of it where he's getting rejected, and the no's and the no's and the no's, I think is representative of what we all go through as founders, where you just get no's and no's and no's. And then there's this snowball effect, if it goes well, that starts to kind of roll, and somebody writes you a check, and then somebody makes an introduction, and there is that, if you get it right. But man, it is hard. It's a very hard and lonely place to be as a founder.
Yeah.
And when you think about like personal finance, I mean, you and I have chatted a lot about this. I mean, that was 14 years ago. And I would argue
in a category, the word fintech had never.
Right. But even today, like personal finance we're still in like the early days, I think, of helping, particularly sort of post-college grads figure out how to manage their money and invest their money. And how much opportunity do you see in that landscape today? And I guess maybe one question for you as somebody who thinks a lot about it is, why hasn't it been solved? Like, why isn't it, I mean, it's like, you know what I mean? Like healthcare is such a big thing in our country. And yet this area is, I mean, the best advice people get is from like hucksters on YouTube and TikTok. It's crazy.
It's crazy. Like you and I need like 7 hours for me to tell you all the reasons.
Yes, this is a longer conversation.
And I should mention, I'm a certified financial planner. I published 2 books, New York Times bestselling, on the wallet. And the punchline is, for most people, 78, now more than that because of COVID, call it 80+% of the country lives paycheck to paycheck. And looking at your wallet all day is really stressful. It's right. It's like, how do I whack this mole to this whack mole? And like, it's a juggle. And so every day when I went to work at LearnVest, people used to say, who's your competitor? And I said, I wish I had one, but I don't. I'm competing against apathy. I'm really competing against overwhelming stress, the inertia of the wallet. It's not a fun place for most people to play. And so I believe there's wild opportunity over the next decade. And you and I maybe should invest in something together in this category. And I do believe at some point, self-driving wallets, I think people want control, but people to execute. And I always used to say that the weakness of LearnVest, which was, think TurboTax for financial planning, $500 a year. We gave you access to an advisor and a plan and helped you execute. I kept saying people just want us to do it for them. Like if we could just say, Jeff, say yes, and then we're just going to go do it all. That's what people wanted, because it's not fun to engage because money is so emotional. And so you asked, why is it still a problem? Financial literacy is still not taught in literally almost everywhere. Colleges, schools, grad programs.
No.
Money touches every day of your life. It's a permanent lifeline. So you really need to know. It's, for most people, a very stressful topic. Most of us didn't grow up with enough money. That's just a feeling everybody has almost. And then you go into a place where it's evolving, right? So do I invest in crypto or Bitcoin or NFTs? And it's constantly in motion. And so that's the other thing, is like the knowledge base keeps evolving. And so
the analogy I gave somebody was a little bit like cybersecurity. Like it's never going to not be evolving. It's going to always, there's always going to be, I don't think this market will ever be solved, but man, we could, and it's global, right? You think about today, how many people own equities? Maybe 300 million out in the world.
Yep.
Right. Maybe 150 million in the US and maybe another 150, but like Africa, China, Southeast Asia, all these markets, people want, they're going to want to invest in something, and they don't have access to our markets like we do. And so I won't be in the venture capital industry in 50 years. I hope I'm alive in 50 years, but this market will still be a huge TAM and opportunity that people will be funding in 50 years. I think.
I agree. I absolutely, hopefully it'll be you and I still doing good work here. But yes, I think we're going to see so much. I think we're going to see technology unlock, particularly money movement technology, unlock the ability for a lot of automation.
Yes.
Here. I think will be a beautiful thing.
So you sell your company, you get acquired by a pretty big organization. What was that like? And what was it like? And what advice do you have for others who might be going through that scenario, that M&A scenario at some point in their career as a founder?
So I always say I approach my career like a wedge of cheese, which I'd like for, the longer I go into my career, the more people want to stick with me. And one of the things I'm really proud about Inspired is that everybody on the team here that is building the firm with me, we've overlapped for 63 years of working together. I just had this deep instinct that I want to stay in business with the people I love. Mm-hmm. And when the CEO acquired us, and when we really started the talks, I said to him, I said, most founders want to sneak out the back door as fast as they can. I commit to you that my one goal is that when we get through this, that you, I hope, will feel like this is one of the better decisions that you've made. And so I was supposed to stay 3 years. I ended up staying 4.
Yeah.
I joined the management team, which I didn't expect to do. The company is in Milwaukee, Wisconsin. I live in New York City. I was having babies in New York City, flying to Wisconsin 1 to 2 times a week. And, you know, I just wanted to do the right thing. So for everybody, what I felt mattered was, one, to deliver on promises, because life's short, but careers are long. And I do think, you know, in acquisitions are everything that everybody thinks they are. Exciting, so much hard work, really complicated. You're taking 2 organisms and bringing them together, and like friction is really natural. And what became great about it was I got to sit on the management team of a Fortune 50 company that does 40 billion of revenue and take on a huge job. And I learned a lot. So I kind of approached it as I never finished my MBA. And I said, I really want to be a steward of growth right now for myself. And so I learned a lot, and I'm really grateful for it. And it brings a whole other perspective to how I think about life now.
Yeah, it's interesting. I sold my company to VeriSign in 2005, and same thing. I had a 2-year deal, but I stayed for 3. People always ask me, you know, were you going crazy? I said, you know, I learned a ton. I mean, I got to work with amazing people that went on to be CEO of Palo Alto Networks, CEO of Equinix, you know, the CTO of AT&T. We're all colleagues at VeriSign, and it was a great experience, and it gave me a really interesting lens today, particularly as an investor. But I think, you know, one of the things that I tell founders, that sentiment that you had of wanting it to be successful post-acquisition, I think buyers can feel that. And when I'm advising founders in an M&A transaction, I do try to convey to them, hey, one of the things you need to think about is, what is life going to be like on the other side? Because in most cases, you aren't just going to walk out the door, or if you are, it won't be considered a successful transaction on the other side. And the buyer can kind of feel that. The best deals I've seen are ones where, you know, the acquired company went in and actually both parties thought it was a great fit. They don't always work. They don't know, you know, nothing plays out like you think it's going to, but I do think buyers, they can kind of sense that, and they're testing for that in the process.
100%. And I feel like now, as I sit here in my stage of life, probably the most important thing I've learned in my career is you really cannot fake things. People are not stupid. People aren't stupid. If you authentically feel something and you're authentically committing something, people feel it. And I'm sure, Jeff, so much of what you and I do in venture is sit on this side of the table and ask ourselves, is this person serious?
Totally.
Are they real?
100%.
And to your point, I really wanted to see it through. And I felt like my reputation was as on the line as his. And I wanted to, in the end, it turned out really beautifully. And he wrote me probably one of the more important letters of my whole career. My husband framed it for me.
Oh, wow.
Saying it was the best decision that he had made in his career. And I feel like I got an incredible growth moment, but like the commitment was real. And so you can't fake things. People pick up on it.
Yeah.
And everybody in the country is really good at picking up if people are real.
Yeah, I totally agree. And that is a big part of our investment process. That is for sure. I'm going to have to add that. We're making a list of kind of informal criteria. I'm going to have to add that. What about, okay, so then you are there, and then you decide to start this new venture capital firm in 2019, I think it was?
Yeah, we were like formalizing all the documents starting the summer of 2018.
Okay.
I gave 6 months notice. February 1st, literally left that day. We closed 125 million. It was going to be a $200 million fund, but I couldn't fundraise publicly. So that was the first close. Was everybody who backed me before stepped up and said, I'd like to back you.
That's cool.
And I had my 3rd child, and then I finished the fundraise.
It's a good sequence.
Yeah.
And so tell us about the vision. What was the vision for the fund, and what have you, I think it's always fun too. What have you learned along the way that you didn't know going into building a venture capital fund?
So I'm 3 years and 3 months in or so.
Yeah.
So the premise was really simple. And I think one of the things I've learned about myself is that if I do something, I do it so intensely and with like 180% of myself that it has to be something like that. One, I truly want to do, that I actually can have the skill sets to do well. And it often comes from like a really customer first. I was client number 1 at LearnBest. I was building the product that I wish existed for me. And that like was my North Star the whole time. And Inspired was born literally because I said to myself, I want to build that fund that I wish existed for me back when I was 23. And to your point, like you know what it's like to build businesses and be a founder and go through it all. I just remember every time I remember every minute, and I know you do too, where it wasn't a great experience or somebody wasn't totally prepared for your board meeting or whatever it may be. You remember it because it's literally your life's work and you have staked you have laid your whole life on the table. And so I said to myself, I really want to go build a fund that I wish existed. Second, I really believe in New York. And as a really committed, passionate New York City person, and even I say that strongly this week, double strongly this week, with everything happening here, I just felt like New York is an epicenter of the United States, but the world. And to think of New York City as an underdog in tech, like brings me joy in a way where I was like, I want to go build the most special firm I humanly can with the people I love and trust, to go back the founders that, you know, are those like really big swing, iconic, uncomfortably big thinkers. And literally the words came out of my mouth, and here's how my brain operates. I'd been investing and I'd been an investor. I started at Insight, and the second it came out, I couldn't unthink the thought. And it was that was it. Like I literally looked at my husband and I was like, the next 30 years was just born, and now I just have to go do it. And it literally was the next day that I went in and said, here's what I'm going to go do.
Cool.
And it was just that clear. And I don't know, I've learned enough about what I'm good and bad at, which there's a long list of things I'm not great at, but it matched what I would do for free. I would do this for free, sitting with founders, thinking about their darkest days. It's not the fun days that are fun for me. It's the dark ones. It's when things really hurt and are scary that I think it brings out the best of us. And then, so anyways, we're early stage fund, and really focused on, you know, we're category agnostic, early stage seed series A, and we pick 25 companies every 2.5 years and we give them all our might. And it's almost that simple.
That's cool. I do think it's funny. I just spent an hour on the phone with one of our CEOs, and we were talking about how, you know, times like this, when the market's volatile, there's a lot of shit going on in the world. It is when it's really hard to be a founder and a CEO. And we were sort of using the we crashed example again. I said, you know, have you seen the show?
Yes. I mean, I'm like, who hasn't seen
there's the episode where they're at like summer camp. And I was telling her, like 2020 and 21 for a lot of people in tech were like summer camp.
Oh yeah.
Everybody loves you. It's great. And I'm like, that's over. That's gone. And nobody's going to love you this year. But this is when a lot of great companies are going to get built, right? Because you can focus on execution. You're well capitalized. But you as a CEO are going to have that conversation, because you got a lot of younger people on your team who've only been at summer camp. And so they're like, hey, where's all the rah-rah? Where's the pay increases? And da-da-da-da-da. And it's like, no, we're going to build a company now for the next 12 to 18 months. It's going to be around for the next decade. We're going to create a ton of value, and it's going to be awesome. It's just not going to be as exciting as maybe you thought it was in June of 2021. And that's a big mindset shift. Plus, we're coming out of a pandemic. Inflation is high. People want to take a break. So I just think this is going to be a really rough year, really rocky year for a lot of people and a lot of companies. Not, I mean, you know, whether it's the fundraising climate or inflation or whatever, just the combination of everything. And I was in Silicon Valley for 9/11. I was in Silicon Valley for 08, 09. Like I've been through a bunch of these phases. You can just tell when things are going to be a little choppy. And I think that's where, as a board member and as a founder, you can really lend an empathetic ear to a founder and say, hey, I totally get it. You know, talk to me, and how can I be helpful and constructive?
And not only are these years great, but if you survive and thrive through these years, you get to be the best.
Yeah, exactly.
These are the times when you get to pick up opportunity, you get to pick up, you know, talent that you couldn't afford, et cetera, et cetera. You get to pick up a lot of wins if you get really, really strong during a downturn of any kind.
Yeah.
So yeah. And also what gets me out of bed every day is I love problem solving. I like hard, complicated, gnarly problems. And it brings me joy to help people solve them. Like I explained my job. A little girl just turned 7, and I was like, here's what mommy does. You know how you like puzzles and we like to lay them all on the floor and then you figure it all out and you put it together? I do that all day long. Because
right.
What mommy does, and mommy loves it, and it really enjoys puzzles. And that's how I describe venture capital too.
The only challenge with our business is you don't know if all the pieces are there. So you get like halfway through and you're like, oh crap, we're missing 7 of the
Where's the
pieces.
top of the Eiffel Tower?
Yeah,
We
yeah.
need the top of the Eiffel Tower.
And what are some of the ideas that you're most excited about, or maybe even companies that you've funded in the last, I don't know, 3 to 6 months that got you really excited that people would resonate with?
Yeah, I'll give you a sense of we like companies. I'll give you a flavor of the sort of companies we get excited about. So one, all the obvious stuff. We like founders who are like really committed to the vision, the mission in a way where they really appreciate that it's 15 years. And I remember being the founder when I was like, 10 years from now, like that's half my life. What do you mean it takes 10 years? Like, but they really appreciate that level of commitment. I really like companies that have many chapters where if you can get to chapter 1, it unlocks chapter 2 and 3. And Carta is a great example of that. I'm a big fan. Henry Ward, like he went after one thing and it unlocked 7 other chapters past the company. And I think that's such a beautiful thing. So companies where as you get bigger, you get better because it unlocks chapters that give you advantage. In general, there's categories that we're comfortable with weird. I think what gets me excited is when I'm sitting with a founder who has a really, really clear vision of a future that does not exist, that you can't see sitting where you are, but it's so clear to them. And then you have a moment where you literally like levitate with them and you're like, holy smokes, if X, Y, and Z happens, like this becomes really powerful.
Right.
And often those ideas are like making the world a better place and removing friction and giving normal everyday people advantages. And so I think that's what like brings me real joy about the job. And then in general, we like businesses that are, don't need tons of capital. We often found to be like repeat founders because they know how to attract talent and all those great things and be good capital allocators. That give you a flavor, and obviously fintech.
Yeah. And maybe one that we're a co-investor in is Chief, and you could talk about what got you excited about Chief, and maybe use that analogy of the chapters because I think it's such an interesting story, and a non-obvious one that when they first started, people are like, wait, what is this?
Yeah, and like many people said no. I was fortunate to be a seed investor, and Carolyn and Lindsay, the founders, they are really amazing. I was a seed investor, and the vision of like, the world is a little broken. We all know this, right? Companies are all mismatched, 5% of less after COVID, just not nearly enough women at the top of companies across the globe. Women are half the planet. So you're just like, that has to be fixed. But to structurally fix that, you can't like fix society overnight. You actually have to, you can't like rewire so many parts of society. And the only way to get it is to create camaraderie and help women get to the top and give them the space to do so. And there's just a big problem, has to be fixed. And the business model is that you join, and I had gone through my own version of YPO. I'd done the 100 Crown Fellowship, where you get attention with a small group of people to get better. And I really deeply believe in self-improvement. And so that was Chief. They were going to offer memberships to cohorts to be with other people, not at your same company of your same level, to get better. It's a super capital efficient business. They get paid up front, and that allows them to then constantly invest in the membership. And so what got me very excited, outside of the fact that you could build a very capital efficient, very big business very quickly, was that you get to 15,000 members and you're north of 100 million run rate. And I was like, there's millions and millions and millions of people who need this. Exactly. And nothing offered. So headline is they're now, you and I are co-investors in this one, but they're now just raised, at a north of $1 billion valuation, profitable, and just getting bigger. And so now they have this ability to continue to do it for more and more sectors of the economy. And then finally, the founder I'd known, and she was just absolute, the CEO, Carolyn, and
yeah, she is
force of nature. And just, you meet them and you know them, and then you see them, and then you give them all your money. That's how
I remember when we first met Carolyn, and Hans was really excited. And, we said, look, we don't, it was really early. I mean, this was, I think, the Series A. And we said, look, we don't know how this gets valued long-term. We don't, the business model, there's a digital component that wasn't there yet. but she is going to create something impactful, and the space is enormous. And if they can figure this, it's kind of back to your point. If they can figure this out, this is a home run. And man, I mean, what are we, 3 years into it?
3
Incredible,
years into it,
incredible.
hugely successful, and you have a lot of work to do. Like just
Yeah, of course.
many years ahead. But that's a good example of a non-obvious one that was really exciting.
What about you mentioned earlier you're authentic, people can tell when you're being authentic. What are some of the things that you look for and maybe reasons that you might not invest with someone? Because founders will come to me and they say, hey, I heard you talking about this and this and this, and I've got all those things. And then, I always try to give them honest feedback. Like, here's why I wouldn't invest in what you're doing. It doesn't mean you're wrong. And you should just take me as, one data point in a million. And I had a lot of no's, and you're going to get a lot of no's. But what are some of the reasons why you might not invest with someone? Or if you think of examples where you've passed?
Yeah. Outside of like not capital efficient or the, broken business model or too much competition or all the like very business oriented ones. I like founders who have been unreasonably thoughtful about what they're going after. And the reason for that is once you begin building something, you don't have a lot of free time to come up with this strategy. So I'd written a 75-page business plan. Like literally, Jeff, not one human read it, except I think actually my boyfriend at the time, who's not my husband, like nobody. It was like everything. And I was like, if this doesn't work, we'll go here. And it was literally like a blueprint with many typos and grammatical mistakes, but it just like got it out on paper. And the reason for it was once we got in, I quickly realized this hypothesis doesn't work, so I could go here. And as the CEO, you're kind of like, maybe you swing 25 degrees. You don't really want to swing 60 degrees, because then it's like probably are really scrapping everything. And it just helps you. And so, when you really push founders on just like, let's go deeper, the level of thoroughness that they can give you also just gives you a sense of how much thought they put into it. Yeah. So that's one. You've heard this before many times. I remember somebody saying it to me after I was 4 years in, and I like laughed out loud. They were like, if you knew what it takes to be a founder, you would literally never be one. Never. Because it gets more painful, emotionally painful, psychically painful, physically, it's just everything. And so founders have become very like sexy and, faint. Any of that has to go away, because it will never work if that's what you're seeking, because it is literally the opposite of that. It is it's your ER triage surgeon all day long, so stressful. And so you have to really so you can tell, does somebody love what they're doing? Are they committed in these levels of depth that are really profound? Do I actually think this is their life's work? Here's another one. Would I work for them? I literally sit there and I think to myself, like, would I tell my most favorite humans in my life / me, sign up to go work for them? And if the question is like, I kind of want to go work for them, I'm like, I got to work with them. Like, I'm like, it's that level of, and that answers a lot of questions, the woo, the camaraderie, the vision, so.
I love your point about unnaturally, because unnaturally deep in the way they've thought about it, because incredibly years down the road, a lot of those ideas come into the product roadmap, right? I mean, it's amazing how many founders I've met at seed or Series A, 5 years later, their product roadmap is what they said 5 years earlier. They had thought through it so thoroughly. They didn't have the resources or the dollars to build it all day one, but they get there eventually.
It was there.
Yeah.
The chapters had been pretty thought out, and you don't know, is chapter 3 actually chapter 4, or is it chapter 4, chapter 1? Like, but you see how you can, it literally is unlocking advantage and value. The final thing, just that like you just said, the last 2 years has been like, camp, and I keep joking, it's been like a keg party, and the hangover is just going to be brutal, and we're going through it. But I think there is, you've got to create value. I think there's just this methodology of hype and momentum. And by the way, you can build stuff that way. You can get lucky and build something that way.
But as we've seen recently, it crashes fast.
But when it crashes fast, it hurts. And actually what gives me like a ton of empathy, I don't want founders. I
No.
don't want them ruined. It's like it sucks. And you put in, like, you've not got to go on the dates and go to the bar and attend your friends' weddings. Like, you've sacrificed. And so I don't want founders to crash. And so the way that I think about that is I look for the founders who can be both extremely urgent, but very patient in execution. And the reason for that is we can't cut corners here. I mean, you know this better than I do, which is there's no shortcuts to life.
No.
There's none. Hard work at the end of the day, every day, bringing value into something for 1 decade. You do that every day with honest hard work, you'll build something of value. And the question is, do you have the emotional staying power to get punched in the face like 75 times along the way? And if you do, you'll build something. And so that's the other thing, is like just the humility to keep getting better, the hunger to keep getting better, the true passion and commitment for what you're building. And then just the staying power to work really hard every single day and not try to have the shortcuts or the momentum play or just the good logic to the long-term vision. If you really can bring that, and you can feel that, and I know you know when you feel that, those are the people you want to back.
Yeah. Yeah. Well, let's leave it at that. We only have a half hour, so I want to stick to our schedule, but I could spend hours talking with you about this. I could spend hours just talking about personal finance, but this has been great and I appreciate it, and love everything you're doing, and obviously look forward to working on more stuff with you.
You're the best. And I look up in every way. So thank you so much for having me.
Okay. Great to see you.